Nobody told you it was going to feel like this when you first got into trading. Somewhere in the back of your mind, you had a picture of what the journey would look like. Maybe it was vague, maybe it was specific, but it probably didn't include the nights you spent staring at a blown trade, wondering if you made a catastrophic mistake getting into this. It probably didn't include the version of you that checked your account balance first thing every morning with a knot in your stomach. It probably didn't include the specific kind of exhaustion that comes not from working too much, but from trying so hard at something and still not having it work the way you know it's supposed to. If any of that sounds familiar, if any part of that just landed somewhere real in you, I want you to do something right now before we go any further. Comment the word familiar below, not later, right now, because what I'm about to walk you through in this video isn't a motivational speech, and it isn't a promise that everything works out fine. It's something more specific and more useful than either of those things. It's the actual relationship between the pain you're experiencing right now and the profit that is on the other side of it. And that relationship is not what most people in this space will tell you it is. Let's start with the thing nobody wants to say directly. The pain you're feeling in trading is not a sign that something has gone wrong. It is not evidence that you picked the wrong path or that you're uniquely unsuited for this, or that the people who told you trading was too hard were right all along. The pain you're feeling is the specific, predictable, almost universal cost of entry into a skill that rewards people who survive the learning curve with something genuinely rare, the ability to generate income from anywhere independently on their own terms. But here's what makes this particular kind of pain so hard to sit with. Unlike most difficult things, a degree, a physical training program, a new business trading, doesn't give you visible linear progress as evidence that the pain is worth it. A student knows their knowledge is growing because they can measure it in exams and courses completed. An athlete knows their body is changing because they can measure it in times and weights and physical performance. A trader in the middle of their learning curve often has almost no reliable external signal that they're getting better, because the market's short-term randomness can punish good behavior and reward bad behavior interchangeably, often for months at a time. This is the specific cruelty of the learning curve in trading. The pain is real, the progress is happening. But the feedback loop between the two is so noisy, so delayed, and so easily distorted by random outcomes that the trader almost has to take it on faith for an uncomfortable stretch of time that what they're going through is building something before the something becomes visible enough to confirm it. I want to check in with you here because I think this specific experience, progress happening invisibly while the pain is very visible, is one of the most isolating things about this stage of development. Have you ever had a week where you genuinely followed your rules, stayed disciplined, made good decisions, and still lost money? A week where you did everything right and the outcome was still negative? Comment invisible progress below if that's happened to you, because I want you to see clearly before we go any further that doing the right thing and losing money in the short term is not a contradiction in trading. It is one of the fundamental, unavoidable features of operating with an edge in a probabilistic system. It means your process is intact. It does not mean your process is wrong. Here's the first thing I want you to understand about the relationship between pain and profit in trading, and this is something that will reframe almost everything else in this video. The pain is not accidental. It's not an unfortunate side effect of the learning process that a smarter system would have eliminated. It is structurally necessary, and not just necessary to endure, but necessary to learn from in a specific way that cannot be replicated by any other method. Let me explain what I mean. The most important lessons in trading are not transferable through information. You cannot be told in a way that fully protects you that moving your stop loss under emotional pressure is catastrophic. You cannot be told in a way that creates real behavioral change that adding to a losing position because you're angry at the market is not a trading decision. It's an emotional one wearing a trading costume. These lessons have to be felt at real cost before the nervous system actually encodes them at the level where behavior changes. This isn't a flaw in the learning system. It's how human beings build deep, automatic, genuinely reliable competence in any domain where the stakes are real and the decisions happen under pressure. Athletes don't learn to perform under pressure by reading about pressure. Surgeons don't develop steady hands by watching videos of surgery. The competence builds through exposure to real conditions with real consequences, and the consequences are what make the lessons stick in a way that no amount of information ever could. In trading, the consequences are financial. That's what makes them feel so personal, so high stakes, and so difficult to separate from self-worth. But the function they serve, converting intellectual understanding into deep behavioral learning, is the same function pain serves in every other skill domain where genuine mastery eventually develops. I want you to sit with that for a moment before we move on, because I think it's one of the most important reframes in this entire video. Think about the most expensive mistake you've made in trading. Not the biggest loss in raw dollar terms necessarily, the one that hurt the most to live through, the one that kept you up at night, the one you to ask yourself, honestly, what did that specific mistake teach you that you genuinely, deeply, behaviorally know now, not just intellectually, but in your bones, that you could not have learned any other way? Comment one word below that describes what that specific painful experience actually taught you. Patience, sizing, rules, humility, whatever it is for you. I genuinely want to see what comes up, because the answers to that question collectively tell a more honest story about how traders actually developed than almost anything else I could say in this video. Now let's talk about something that makes the pain specifically harder to bear in trading than in most other difficult pursuits. And it has to do with how trading sits in a person's life relative to their sense of self-worth. When you lose money in trading, it doesn't feel like losing a game. It feels like failing a test with no grade scale, no teacher to explain what went wrong, and no clear path to a better score next time. And because money is not abstract, because it represents real things, real time, real sacrifice, real security, a financial loss in trading can very easily become in the trader's internal experience a verdict about their own intelligence, their own discipline, their own worth as a person. This is the most dangerous thing about the pain phase of trading. Not the financial cost itself, though that's real and serious. The danger is the interpretation, the meaning the trader assigns to the pain, because there are two completely different meanings a trader can assign to exactly the same painful experience. And those two meanings produce completely different outcomes. The first meaning is this pain is evidence that I'm not good enough for this, that I made a mistake getting into trading, that the people who succeed here have something I don't have and can't develop. The second meaning is this pain is the specific unavoidable cost of building a skill that most people who attempt it give up on before it pays off. It is not evidence of my inadequacy. It is evidence that I'm in the part of the process that feels worse before it starts to feel better. Same pain. Completely different trajectory depending on which meaning the trader holds. I want your honest answer here, and I want you to be real with yourself before you type it, because this is one of those questions where the easy answer and the true answer are sometimes different right now in this moment. Which of those two meanings does the pain in your trading feel more like? Comment verdict if it mostly feels like evidence against you. Comment cost if it mostly feels like the price of something worth building. There's no wrong answer. Wherever you are is just information. But naming it honestly out loud in a comment is one of the fastest ways to actually examine it, rather than just living inside it. Let's talk about the traders who made it through. Not the ones who make it look easy on social media, but the real ones, the ones who eventually reached a place of genuine, sustainable profitability after a genuinely difficult journey. Because here's what almost all of them have in common that almost nobody talks about. They went through a specific moment, often a very dark one, where they came closer to quitting than they've ever publicly admitted. A moment where the pain was at its peak, the visible progress was at its minimum, and the gap between where they were and where they needed to be felt not just large, but possibly permanent, and they didn't quit. Not because they had some superhuman reserve of willpower that other traders lack. Not because they had better information or a superior strategy or some advantage that made the path easier. They didn't quit because something in them at that specific moment made a decision that the pain they were currently in was still preferable to the regret of quitting before finding out whether the other side existed. That decision at that moment is, in my view, the actual turning point in most traders' journeys. Not the day they found the right strategy, not the day they understood risk management, not the day they read the right book or watch the right video, the day they decided in the middle of real pain that they were going to stay. I want to ask you something personal here, and I mean it genuinely. Have you already had that moment, the moment where you came closest to quitting, looked at it directly, and chose to stay? Comment "I stayed" below if you've been through that moment. And if you haven't hit it yet, if you're reading this thinking it sounds dramatic and you're not sure it applies to you, save this comment section and come back to it in 6 months. Because if you stay in trading long enough, you will have that moment. And when you do, I want you to remember that every single person who eventually made it had it too. Now, let's get specific about something, because this video isn't just about sitting with pain. It's about using it productively. And there's a very important distinction between pain that builds and pain that just costs. Not all trading pain is equal. There are two types, and knowing the difference is one of the most practically useful things you can take away from this video. The first type is what I call instructive pain. This is pain that comes from a real mistake, a rule broken, a lesson not yet learned, a gap between your current understanding and what the market required of you in that moment. Instructive pain hurts, but it contains information. It is pointing at something specific that, once identified and addressed, actually moves your development forward. The expensive lesson about position sizing you'll never forget. The blown challenge that finally made you take your daily loss limit seriously. The revenge trade that cost you a week's worth of gains and permanently changed how you respond to a losing day. This kind of pain properly processed, meaning honestly examined rather than explained away or wallowed in, is the primary fuel of real trading development. It is the mechanism by which experience actually converts into competence. And when you find yourself in this kind of pain, the most important thing you can do is resist two specific temptations. The temptation to explain it away, that was just bad luck. My process was fine. And the temptation to spiral into it, I always do this, nothing ever changes. I'm never going to get this. Both responses waste the lesson. The first pretends it isn't there. The second drowns in it without extracting what it's offering. The second type is what I call corrosive pain. This is pain that doesn't point at anything specific. It's the generalized chronic heaviness that comes from staying in a painful situation without any honest framework for understanding why you're there or what it's supposed to be building. It's the trader who has been losing money for 2 years without ever sitting down and honestly asking whether their process is actually sound, or whether they're operating without a real edge, or whether they need to step back and rebuild from a different foundation. Instructive pain builds, corrosive pain depletes, and the line between them is almost always honest self-examination. If you're in pain and you're trading right now, the question worth asking isn't how do I make this stop? It's what specifically is this pointing at? If you can answer that question with real specificity, a particular rule you keep breaking, a specific aspect of your process that isn't sound, a defined gap in your understanding. You're in instructive pain, and it's building something even if you can't feel it yet, if you can't answer it at all. If the pain just feels like a heavy, undirected cloud with no specific lesson attached, that's worth taking seriously, because corrosive pain without honest examination doesn't eventually turn into profit. It just turns into more corrosive pain. Comment instructive or corrosive below, depending on which type feels more like where you currently are. And if you're not sure if it feels like a mixture of both, comment both. That's also a real and common answer. And naming which type is which in your own situation is already more honest self-examination than most traders do. Let's talk about what profit actually looks like when it eventually arrives on the other side of this, because I think the picture most traders have in their head about what making it in trading looks like is slightly wrong in a way that matters. Most traders imagine profitability as a dramatic, clearly marked event the day everything clicks, the day the losses stop and the wins start stacking, the day trading finally feels easy, and the earlier struggle starts to seem like a distant memory. That's not what it typically looks like. What it typically looks like is quieter, slower, and in some ways anticlimactic, and that's actually a good thing once you understand why sustainable trading profitability usually arrives gradually over a stretch of months where the bad sessions get slightly less destructive. The rule following gets slightly more automatic. The emotional reaction to losses gets slightly smaller, and the overall curve of results bends slowly, almost imperceptibly at first, in a positive direction. There's rarely a single moment where everything is obviously different. There's more often a stretch of time where you look back over the previous 3 months and notice with something quieter than excitement, more like relief that the pattern has changed. And the traders who recognize that quieter version of arrival as genuine progress are able to build on it. The ones who dismiss it because it doesn't match the dramatic version they expected often don't realize they've actually arrived until long after they have, which means they miss the window to consolidate what's working and let it compound. I want to comment from you on this one because I think the expectation mismatch here is real and worth surfacing. Is the version of profitability you're working toward dramatic, a clear, obvious, unmistakable moment of arrival? Or are you prepared for the quieter, more gradual version that most traders who actually make it seem to describe? Comment dramatic or gradual below. Neither is wrong, but knowing which picture you're carrying changes how you interpret the evidence in front of you right now. Here's what I want you to hold on to from everything in this video. The pain you're in right now, if you're honest with yourself about what it's pointing at, if you process it as information rather than verdict, if you stay in it long enough to extract what it's actually trying to teach you, that pain is not the opposite of profit. It is the path to it. Every trader who ever built something real in this market went through a version of what you're going through. The specific shape of it was different for each of them. The strategies were different. The timelines were different. The exact mistakes were different, but the structure was the same. A period of real, sustained, often invisible progress happening underneath visible, often intense pain, followed eventually by a shift that felt quiet from the inside and only looked inevitable in hindsight. You're not behind. You're not uniquely broken. You're not the exception to the rule that this works eventually. If you stay in it honestly, you're in the part of the process that feels worse before it starts to feel better. And the fact that you're still here watching this video, thinking about this, taking it seriously enough to sit with these questions is evidence of something that matters more than your last month's results. It's evidence that you haven't given up on finding out what's on the other side. And one final comment prompt before we close this out, because I want this one to stay with you. Forget where you're right now. Forget the last week, the last month, the last drawdown. If you could send a single sentence to a version of yourself from 6 months ago, the version that was in the middle of whatever was hardest then, what would it be? Comment that sentence below, because I can almost guarantee that someone reading this comment section right now is in the exact moment your past self was in. And your sentence might be exactly what they need to read today. But here's the thing about making it through the pain phase. Getting to the other side is only part of the work, because there's a specific trap that catches traders right at the moment the pain starts to ease, a moment when they're most vulnerable to a completely different kind of mistake than the ones that caused the pain in the first place. That's exactly what the next video is about. Watch it now. Because the moment the pain starts to lift is one of the most dangerous moments in a trader's entire journey. And knowing why is what keeps everything you just built intact.